Hi class, today we're going to be looking at chapter 21, cost volume profit analysis. And I've got some terms I want to go over with you, and then I'm going to try to get to your first problem in Excel, or a B problem that'll be similar to it. So hold on just a minute. Let me share my screen with you. You should be able to see now some chapter 21 notes that I've taken. There's some terms that you need to understand before we can get to the problems. So one of the terms that they introduce to you in this chapter is something that we call fixed cost. We're going to be studying the behavior of cost and how cost can change with the number of units that are produced in a manufacturing business. So when we talk about the term fixed cost, and we're talking about total fixed cost here, the total fixed cost will not change as the activity level changes. And what that means is the total fixed cost is going to remain the same no matter how many units that you produce. The total fixed cost will remain the same, or they'll remain constant with relevant range of activity. And so I probably need to define for you what relevant range of activity means. And that's just the range of activity over which costs are of interest to management. So an example of a fixed cost would be a salary that is paid to a manager. If you can imagine, when we pay a salary, if we pay the salary on a monthly basis, the salary amount will be the same every month. It won't change with the number of units produced. It's a salary that we're giving or paying to maybe our management. And this salary dollar amount in total will not change with the number of units that are being produced. So a fixed cost in total will not change as the activity level changes. Fixed cost will remain the same no matter how many units are produced. And it's important to note that the fixed cost per unit, let me emphasize to you, per unit that we're talking about here, will change, or it will vary with the activity level or the number of units produced. The cost per unit will decrease as the activity level increase, or the cost per unit will increase as the level of activity decreases. And I want you to look at this illustration so that I can show you the difference between fixed cost in total and fixed cost per unit. And we're using a factory that's producing perfume bottles, and this is taken right out of your chapter. The number of perfume bottles that they're producing can vary from 50,000 all the way up to 150,000. But the salary that we would pay to that manager, notice it stays the same. So this total salary amount of 75,000 would be your fixed cost that will not change no matter how many units are produced. But the fixed cost per unit, which is labeled here as salary per bottle, will change. The fixed cost per unit, if you produce 50,000 units, is going to be $1.50. I get that by taking the total salary cost and dividing it by 50,000 units. That would give me my fixed cost per unit, which in this case is $1.50 per unit produced. That is if we produce 50,000 units. But notice what happens if we produce 100,000 units. Our level of units has increased our salary remained the same, so the salary per bottle is going to go down, or our fixed cost per unit is going to go down to 75 cents. If the more units that we produce, the more that the fixed cost per unit will go down. And the opposite is true with the less units that you produce, the more the fixed cost per unit is going to be. So it's very important to get these terms down and to understand the behavior of fixed cost, whether it's fixed cost in total or fixed cost per unit. It's important to understand the behavior of fixed cost. Another term that they're going to introduce to you in this chapter is something that we call variable cost. And there will be total variable cost, and there will be variable cost per unit that we're going to talk about. When we're talking about total variable cost, the total variable cost will change as output changes. In other words, the more units that we produce, the more our total variable cost will be. The total variable cost will change as the output or the activity or the level of units that we manufacture changes. Variable cost will change with the range of activity, and that's variable cost in total. An example of a variable cost would be direct materials. Direct materials cost will change depending on the number of units produced. In other words, the total direct material cost will vary with the number of units produced. However, the direct materials cost per unit will remain the same or stay constant no matter how many units are produced. And I'm giving you another illustration of where that's happening. Remember the perfume bottles? These were the number of units produced, so I just used those as the same as this example here. We're talking about a variable cost such as direct materials. So we would need to know the direct materials cost per unit. Notice the direct materials cost per unit is $10 per unit. It stays the same, or it remains constant no matter how many units are produced. What will change is the total variable cost. In this case, the total variable cost is the total direct materials cost. So if we produce 50,000 units and the materials cost us $10 per unit, the direct materials cost will be 500,000. If we produce 100,000 units, the direct materials total cost will be $1 million. If we produce 150,000 units, the direct materials cost in total will be 1,500 units. So the total of the direct materials cost will change or will vary with the number of units produced. The total variable cost will change with the number of units produced, but the variable cost per unit will stay the same no matter how many units are produced. So again, it's important for you to understand how cost affect, the behavior of cost affect the total cost. There's a cost formula that you need to be aware of, and you need to learn this. And that cost formula is that the total fixed cost plus the total variable cost will equal the total cost of the units produced. So variable cost formula, you need to know this one too, is the variable cost per unit times the units produced. That will give you the total variable cost. So sometimes the cost formula, this formula right here, can be combined into one formula. And this is the combined formula here. Notice we're still talking about total cost, and total cost are still going to be your fixed cost plus your variable cost. They've just broken the formula down for variable cost as to variable cost per unit times the units produced. So another term that we need to learn in this chapter is what we call mixed cost. And a mixed cost has both fixed cost and variable cost in it. An example of a mixed cost would be a salesperson's salary if they make commissions in addition to their salary amount. You'll remember we said the salary portion is the fixed cost, but the variable portion will be the commissions that are earned on the sales, because the commissions will change depending on the amount of the sales that they earn. This is a variable cost. It's important when you're looking at mixed cost to know how to estimate the variable and the fixed portion of a mixed cost. One method that they show you in this chapter, and it's the only method that they show you in this chapter, is what we call the HighLow method. In the HighLow method, what they're doing is they're using the highest and the lowest activity levels, or the number of units produced, and the cost to estimate the variable cost per unit and the fixed cost per unit. They're using the lowest and the highest amount of activity to estimate the variable cost per unit and to find the total fixed cost. Remember, a mixed cost has both fixed cost and variable cost in it. So we have to have a way to determine what is our fixed cost and what is our variable cost. And the HighLow method will allow us to do this. What I've given you is an example here for the months from June to October. These are the number of units that the company has produced. And this is the total cost associated with those units. That is, the total cost is the fixed cost plus the variable cost together. The total cost is this amount for these units produced. Using the HighLow method, you're going to choose the highest number of units produced and the lowest number of units produced. So you have to choose what is the highest method of or number of units produced. So if you're looking through there, the highest number of units produced is produced in August. The highest number of units produced is 2,100 units. The total cost of those 2,100 units was $61,500. Choose the highest cost and compare it to the lowest. Choose the highest units produced, which will give you the highest cost, and choose the lowest units produced, which will give you the lowest cost during this period of time. So the highest cost again came in August because the number of units we produced was the highest at 2,100 units with a total cost of $61,500. Choose the lowest number of units produced, which is 750 units that were in October. That had a total cost associated with it, $41,250. So the highest costs were written down, the lowest costs were written down. The next step is to determine the difference between the highest units produced and the lowest units produced. So what we do is we subtract the lowest units from the highest units, and that difference is going to be 1,350 units. We're going to also find the difference in the total cost. The highest cost was $61,500. minus the lowest cost will give you the difference in the highest and lowest cost. The next step in determining the high-low method is to determine the variable cost per unit. And the way we do that is we take the difference in total cost, which is $20,250, and we'll divide it by the difference in units produced, which is, excuse me, 1,350 units. So I'm going to simply divide $20,250 by 1,350 units. That will give me $15 as my variable cost per unit. Once I know the variable cost per unit, I can substitute it in the variable cost formula for total variable cost. And that formula is this. The total variable cost is equal to the variable cost per unit, which would be 15. I would need to multiply it by the units produced. In the high-low method, the units produced, I have a choice of choosing either the highest units produced or the lowest units produced. Either way, it will give us the total variable cost for the units produced. In the example that I'm using, I'm going to use the highest unit produced. I could have chosen the lowest units, but I just wanted to use the highest for whatever reason. So my variable cost per unit of $15 would be multiplied by my units produced, and since I'm choosing the highest method for that, my total variable cost using the highest number per units produced is 31,500. Again, I get that by taking $15 variable cost per unit times the number of units produced, 2,100 units, and that will give me 31,500. This is my total variable cost. If I know what my total variable cost is, and if I know what my total cost to produce those units are, I can find my fixed cost at the highest level of units produced. To do that, I would subtract my variable cost, total variable cost that I found from my total cost, and that will give me my fixed cost. So in other words, my total cost of the highest units is 61,500. If I subtract out my variable cost for the highest units of 31,500, that will give me my fixed cost of $30,000. So when you have a mixed cost, you need to learn how to separate the variable cost from the fixed cost, because a mixed cost will have both variable and fixed cost components in it. You need to learn to separate those costs out. And to do that, we will use the formulas that I talked about here. If you chose to use the lower method, the variable cost in total will change, but the variable cost per unit will not change. So $15 times the lowest amount of units produced would give you the total variable cost using the lowest units. Then you could subtract the variable cost from the total cost and it'll still give you the fixed cost. The fixed costs are going to be $30,000 no matter whether you're using the highest method of units in your calculations or the lowest method of units in your calculations. Fixed cost in total stay the same. So it's very important that you learn the information that I've got here first. Now, what I want to do next is I want to go to Cengage, and I want to share with you the first problem in chapter 21, which is problem 21-1B. So hold on just a minute with me. I'm going to stop sharing this with you, and I'm going to go back to sharing the screen, and I'm going to go to Cengage to do that. So you should be able to see Cengage now. And the first problem that you're going to have to do is you're going to have to know how to classify cost as either fixed cost, variable cost, or mixed cost. So use that Excel spreadsheet that I'm going to attach with this video to help you when you're answering your questions in Cengage for problem 21-01A. So all we're doing is we're trying to determine whether these items that they've listed here are fixed cost, variable cost, or mixed cost. We're going to start with our fabric sofa. If we are manufacturing sofas and we are using fabric to manufacture those sofas, they're going to be our sofa coverings. This is an example of a material, and it would probably be a direct material, and a direct material would be classified as a variable cost because the total of the cost of the fabric will depend on how many units you manufactured of sofas. So this is a variable cost. In B, they're saying the wood that is used for framing the sofas. This too is a type of direct material. The more sofas you produce, the more the cost of the wood is going to be. So this is a cost that we call a variable cost because it varies with the number of units produced. In part C, we have legal fees paid to attorneys in defense of the company's patent infringement suit. The legal fees are $25,000 plus $160 per hour. That $25,000 is fixed, but the variable cost would depend on how many hours we are charging at $160 per hour. Since this has both fixed and variable in it, it's what we call a mixed cost. So this is an example of a mixed cost. The salary of a production supervisor would be an example of a fixed cost. Fixed cost will not change with, and the total fixed cost will not change with the number of units that you manufacture. So it doesn't matter how many units we manufacture here, we're going to still pay a salary to the production supervisor of whatever that salary amount is. It is a fixed amount. The cartons used to ship sofas is going to be a type of, cartons would be a type of direct materials. The direct materials cost would depend on the number of sofas that were shipped. So this would be an example of a variable cost. The rent on experimental equipment is $50 for every sofa produced. Now, on this one, you could look at it in two different ways. The rent of $50 is a fixed cost. But if you were looking at this as, you know, depending on how many sofas that we produce, it could be a variable cost. So sometimes you have to use your own judgment, and you have to be careful when you're analyzing these. So the rent on the experimental equipment, I would tend to think of rent as being a fixed cost. The fixed portion of this is $50 for every sofa produced. It's not telling you that you produce 50,000 sofas here. It's just saying that it is $50 as a fixed amount for each sofa produced. And so I'm going to check my work there. And obviously I'm wrong here. See, I thought of it wrong. So you, like I said, you have to be careful here when you're analyzing this. If it's like if you're paying rent on a building and you pay the rent of $5,000 every month on a building, that would be fixed cost because it stays the same throughout the months until the landlord decides to change it. But in this case, it is based on every sofa produced. So they were wanting variable cost here. So sorry about that. So even your instructor can make some bad choices when you're looking at these. So just be careful and try to get the basics down as far as what the definitions are for fixed cost, variable cost, and mixed cost. All right, in G, we've got straight line depreciation on factory equipment. What straight line depreciation is a fixed amount of depreciation every single year. Now, you probably haven't studied much about how to determine the amount of depreciation. This is coming in a later chapter. If you're an accounting major, you will learn how to do the straight line depreciation method. But straight line depreciation is always going to be a fixed cost in this chapter. Other depreciation methods might not have the same depreciation amount associated with it. So if you ever see something like the units of production method of calculating depreciation, it would be a variable cost. But in this case, straight line depreciation is always going to be a fixed cost. And so I'm going to call this a fixed cost. And for some reason or another, this didn't go away when I fixed it, but obviously they've got green marks there, so it's showing that it's fixed. That's another Cengage thing that I don't quite understand. But let's keep moving. The rental cost of a warehouse, here we go, is $30,000 per month. It's going to be $30,000 per month until the landlord decides to change it. So this is what we call a fixed cost. The property taxes on property, plant, and equipment, they remain basically fixed over a period of time. It's not depending on the number of units produced here. The same is true for our rental cost on a warehouse. We'd have to pay rent no matter how many units we produce. So property taxes are considered to be fixed cost because they're basically the same every year unless you bought more property and then it will change, but it'll be basically the same amount every year unless the government decides to raise the amount of the taxes. But it's basically a fixed amount. In J, insurance premiums on property, plant, and equipment are $25,000 per year plus $25 per $25,000 of insured value over 16 million. This is an example of a mixed cost. The $25,000 per year is fixed, but the $25 per 25,000 of insured value over 16 million is variable. So this is an example of a mixed cost. Springs for producing a sofa would be springs would be a type of material, and if it's a material, it's going to be a variable cost. Depends on how many sofas are produced. The consulting fee of $120,000 that is paid to efficiency specialists. This is probably a one-time fee, and that would be considered to be a fixed cost. Electricity cost of 13 cents per kilowatt hour. Depends on how many hours we use as to how much the electricity will cost. So this is an example of a variable cost. It will vary with the number of kilowatt hours that are used. The salesperson's salary is $80,000 plus 4% of the selling price of each sofa sold. This is what we refer to as a mixed cost. $80,000 is fixed, but 4% of the selling price of each sofa sold is variable. So this is an example of a mixed cost. Foam rubber for cushion fillings is a variable cost because it is a direct materials type of cost, and it will vary depending on the number of cushions that we are producing or the number of sofas that we're producing. Janitorial supplies are $2,500 per month. Now, be careful on this one. It's $2,500 per month. So that means that they're doing the same amount every month, and this is going to be a fixed cost. Employers' FICA taxes on the controller's salary of $180,000. Because the controller is making a salary of $180,000, which is fixed, that will mean that the FICA taxes will be fixed on the controller's salary. And then the salary of a designer is going to be a fixed cost. The wages of sewing machine operators will be a variable cost. It depends on how many hours the sewing machine operators work. Wages and salary are two different things. Wages is an hourly amount. So this is an example of a variable cost. Sewing supplies depends on how many fabric sofas that you are sewing up. So this is an example of a variable cost. And I'm going to check my work here. And it looks like all of those are correct. So your first problem is just deciding whether it's going to be a fixed cost, a variable cost, or a mixed cost. I'm going to stop here, and I'll do another video based on the next problem. So I will stop here for today, and we'll see you next time. Bye-bye.